Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day, the trading week. Romaine Bostick, Caroline Hyde, Sonali Basak in for Taylor Riggs, counting you down to the closing bell, and here to help take us beyond the bell. It's our global simulcast. Tim Stenovec and Katie Greifeld in for Carol Masser, bringing together our Bloomberg Television, radio, and YouTube audiences. Tim, peak cyclical optimism. Are we past it?
That's the question. I mean, for much of the day, stocks were kind of struggling to find direction, oscillating between positive and negative territory until really just the last hour, when stocks took a leg lower and continued to move lower, with the Dow down by more than 0.7%.
Yeah, and it's interesting, still searching for a reason. We were just talking about potential whys with Ryan Dietrich. He is the chief market strategist at LPL Financial. And look, September, it's a historically bad month for stocks. We're coming off of 20% year-to-date gains. Maybe it makes sense to take a little bit of profit heading into the weekend. But I will point out this is the fifth day of losses for the S&P 500. Sonali, that's the longest streak since about February.
Certainly, and maybe you have Gina Martin Adams moving the market out with a note today on producer prices too high for the S&P. That is dealing with the slowdown. It's raising a red flag for those S&P companies that are dealing with that margin pressure. Let's see how long that sticks.
Friends, I call it Apple. Down almost 10 points a drag on the S&P 500. Not many of the benchmarks could sustain the biggest company from a listed perspective in the US taking such a nosedive on the day. And that's all to do with Epic Games. It's interesting that some of the other gaming companies are rallying on that news.
Yeah, absolutely here. And, we should point out, at 2 o'clock, when me, Caroline, and Sonali came onto the television air, we had Ross Mayfield over at Baird, and we were sort of joking about the fact that the correction in this market from that all-time high on September 2nd was only about a 1%. Well, in the last 2 hours, that's extended to about 1.7% here. So that fabled 3% correction, that may actually be in the cards here. A 10% correction, which I thought was the definition of a correction. That's still a little bit of a ways off here. All right, let's get you caught up here on the numbers. 34,607 on the Dow Jones Industrial Average. That's going to be down 272 points, or 0.8%. The S&P down 35 points, or 0.8%. The NASDAQ Composite down 133 points, or 0.8%. And stop me if this sounds familiar. The Russell 2000, your underperformer here on the day, actually down 1% here on the day.
I want to go back to what Caroline said about Apple, because you're actually seeing a really interesting story play out when it comes to volumes. Change in volume over the last 30 days on the Dow, higher by close to 40%. That's thanks to Apple and Apple's position on the Dow.
The Dow. We're doing the Dow now?
Well, just for volume, it just shows the power and how many people are and how much shares of Apple are trading. It's wild.
I like the perspective.
Volume is higher too when it comes to the NASDAQ, but with the S&P 500, it's relatively muted compared to averages.
Biggest weight in the S&P 500 down 3.3% on the day.
Yeah.
And let's look at how that all feeds in from a sector perspective, because we drill down and look what's your worst performing on the S&P 500 in terms of your underperforming sectors, off by almost 3%, is tech hardware, equipment. Of course, that's Apple, but it's also some of the companies related to Apple, Seagate and the like. They're all being dragged lower. Interestingly, auto's getting sold off hard as well, off by more than 1.6%. You got Tesla to thank for that, largely because Cathie Wood has been trimming some of her profits there, and we see that Tesla is headed lower. But banks not looking pretty, even though yields are pushing higher today. Banks on the downside, real estate on the downside, too. Food staples, that's all thanks to Kroger, of course. I'm not going to steal all the thunder of the individual movers, but clearly that was a key mover on the day. On the upper side, in the green, well, basically it's just chip stocks that are outperforming on the day. Semis, your key winner, up more than a percentage point. Katie.
Well, sticking with what's in the green, I want to highlight Affirm. This is a buy now, pay later company. It reported earnings yesterday, and it blew past forecasts. Its fourth quarter revenue was above the highest estimates, and the future looks bright as well, at least according to Affirm's outlook. That's why the stock soared over 34% today.
Have you used that, Affirm, or any of those buy now, pay later things? Yeah, I haven't. I don't know anyone who does that.
I have.
But why wouldn't you?
Yeah,
I don't know.
Financial products, and you're reporting on finance.
I'm surprised you haven't. Kate, don't you own a horse, Katie? Did you buy that all at once?
I paid up front. Actually. Yeah,
Bad move,
it was painful. Maybe I should have checked out.
Everyone knows you put your horse on Affirm. I mean,
Palatins, then a horse.
Would have been paying that off for a long time. But moving on, I want to highlight Zynga. This is an online gaming company. It also had a great day, and that is a direct consequence of that Apple ruling. Companies like Zynga now theoretically can link to external websites for payment for their apps, meaning that Apple theoretically shouldn't take a cut. That's why Zynga closed.
I'm sorry to interrupt you one more time, because Zynga, I mean, this just brought...
Katie's playing Farmville.
He's not sorry.
It reminded me here, Katie, because Zynga, it's a lot of like these online quizzes. We have a quiz on the Bloomberg terminal that a couple of weeks ago you were just crowing about having won. I didn't notice your name in the rankings this week.
Crowing. Yeah, I'm embarrassed to admit I went anonymous this week. It was really
okay.
ugly.
Oh, anonymous. Oh.
Anonymous.
Is there a reason why you went anonymous?
I think actually my score wasn't so bad. I think it was about 170. Maybe I remember it exactly because it was that painful.
All right, what's UPS doing?
UPS. Well, this company announced today that it's acquiring Roadie. That is a same-day delivery startup. The amount was. Say that again. Oh, sorry. The amount was undisclosed. UPS already had a pilot program in place with Roadie, though, to test same-day delivery. Looks like they're making it official, and investors seem to like it because UPS finished about 2% higher or so.
All right, well, you got the gainers, I got the decliners. Apple, again, the big story of the day. That news crossing just before noon. Wall Street time shares finishing down by 3.3%. Again, a court ordering that Apple can no longer force developers to use in-app purchases. It's why we're seeing companies like Zynga move higher and other gaming companies. Apple did relax its rules about a week ago. Mark Gurman pointed that out to us in an interview on Bloomberg Radio earlier, but we did still see other stocks move higher as a result, like Spotify as well. Alphabet also taking a hit because of that, because Epic and Epic and the parent company of Google, Alphabet, are also locked in head-to-head. And if bad news for Apple, also could mean bad news for Alphabet as a result of the Google Play Store. Shares of Kroger also lower on the day today. Fell as much as 9.1%, but finishing the day down by 7.5% after second quarter's gross margins disappointed Wall Street.
Have you seen that Kroger already has like Christmas decorations out?
It's not too early. I mean, I think
it's not? Okay.
It's after late. Well, look, it's not too early to be doing Christmas shopping.
Thanks,
Romaine.
You would make a great retail executive.
With the supply crunch,
yeah.
Why not? Yeah, we got to do our Christmas stuff early.
Well, how do you like that the hottest tech stock of the day is UPS?
I like it. They would call themselves, increasingly invested in technology.
Everything's a tech company. It's no longer a horizontal. Well, it's now horizontal, not a vertical. Let's have a look at what's going vertically red across my screen as I'm looking at global macro movers. FX, everything is down versus the US dollar. We're seeing the US dollar outperform. In fact, it was lower on the day at the beginning. And the moon music before the US came into play ball was actually, we were kind of optimistic on a Biden-Xi Jinping call. But now the moon music turned. We got more negative. We're worried about Apple. We're worried about just generally everything. Sentiment changed. Dollar finds itself as a haven bid. The yen off by 0.1%, the euro off by 0.1%, as well as some of the European FX companies, FX pairs. Let's have a quick look at what's happening in commodities, though, because completely different story. In fact, we see oil managed to charge higher, up more than 2%. That is yesterday we saw perhaps it get knocked around by the fact that China was unleashing some of its oil reserves, but we nevertheless still see the effects of Hurricane Ida impacting infrastructure, impacting your production, impacting WTI crude that is up 2% at $69.58. Metals continuing to surge, aluminium among them, copper among them. That's why we saw Freeport McMoran do so well on the day in terms of stocks. Zinc's is up 0.8%, and iron ore up more than 2%. On the red, every sovereign bond. We see Canadian, Portuguese, Austrian, Finnish yields just pushing higher on the day, Romaine.
Yeah, well, let's talk about yields here because, I mean, look, we actually did have some movement here in the bond market this week here. Your 10-year yield is slightly higher. We ended last week right around 132 here. We're going to end it here right around 134 here. So a little bit of movement here. We did a lot of oscillation here in the real yields this week. At one point, we actually saw a negative 99 print here. So basically a less negative number in the direction that a lot of people think real yields should have been going. But now they're actually going to finish the week back down below that negative 1% level here. As far as your 30-year yield out on the longer end of the curve, you had about a 3.5 basis point move here on a weekly basis. But overall here, you can see we're still mired in a range that we've been in now really for the last 3 or 4 months.
Well, the big question I think that investors still have and that we continue to talk about each and every day, it seems like, is what happens when it comes to producer prices. Look for what happened this week, guys. When we think about Sherwin-Williams, we think about PPG Industries, the paint company, those companies saying, hey, wait a second, producer prices are getting so high for us, input costs are getting so high for us that we're actually going to have to decrease what we think we're going to be making this year.
Kroger had that issue as well, right? That was some of its issues, its margins being hit by supply chain issues.
It is the story. We didn't know how long it would last. What is transitory? But it's looking like transitory is going to last well into the near future.
Yeah,
Well, we should get an update on transitory because we do have CPI on Tuesday. PPI obviously very hot today, and this is going to be one of the last top tier data points that the Fed will have to look at before its late September meeting. So we'll see, transitory or not, inflation has definitely stuck around much longer than most economists and maybe journalists thought.
And to bring these points together, if you're spending more on your inputs, it makes it harder to spend money on technology. And you see that with UPS. I can't get over that price rise in UPS today. Spending a little money on technology gives investors something to hold on to.
All right. Well, I hope you guys all have a great weekend because that is going to do it for our cross-platform coverage on this Friday afternoon. Join us again at same time, same place on Monday on YouTube, on Bloomberg TV, and of course on Bloomberg Radio. Have a great weekend, everyone.